We have the policy rate only at the lower end of kind of the neutral range. It's not in deeply stimulative territory, and yet your projection for the economic outlook is pretty bad. It's pretty weak. And you talk about the kind of constraints on monetary policy in stimulating the economy when we're going through this kind of structural shift. Can you unpack that a little bit? Why are we not talking about more stimulus from the Bank of Canada when we are talking about a very weak economic outlook and one that, there's going to be permanent scarring from the U.S. trade policy?
Well, first point, Mark, is we're now at the lower end of our range of neutral. So monetary policy is providing some stimulus. But as I tried to outline in my opening remarks, the role of monetary policy in the current situation is somewhat limited. What we're going through is not just a cyclical downturn. And what do I mean by cyclical? Cyclical means, you go down and you come back up. You go back to your previous trend path. It's not just a cyclical downturn. Part of it is a cyclical downturn. I mean, demand for our products, particularly in the United States, is lower. And there's a cyclical element to that. But part of it is structural. The U.S. has swerved to protectionism. It's harder to do business with the United States. That has destroyed some of the capacity in this country. It's also adding costs. Businesses are looking for new markets. They're reconfiguring their supply chains. That adds costs. So, the fact that this is partly structural and the fact that it's adding costs limits the ability or limits the role of monetary policy in boosting demand while keeping inflation low. So, I mean, just to sort of unpack that a little bit more for you, what can monetary policy do? Well, first of all, monetary policy, let me start with what it can't do. I mean, monetary policy can't target specific sectors. It can't target the hard-hit sectors, aluminum, steel, autos. It can't help companies find new markets. It can't help companies reconfigure their supply chains. What it can do is it can try to mitigate the spillovers from the hard-hit sectors to the rest of the economy. And it can try and help the economy adjust to this structural change. But its role is limited because, as I said, this is more than a cyclical downturn. It's a structural change. There are added costs that limits how much we can boost demand and keep inflation well controlled.